Alright guys, it's your cousin Dustin here. We're going to cover the markets. We're going to look at a lot of different stuff today. It's going to be a fun time. Let's go. The Dow Jones is sitting at 49,918.78. It is down 1.87% today. The S&P 500 is at 7,266.99. It is down 1.62%. The NASDAQ is at 25,169.5. It is down 1.98% today. We got the Qs. The Qs are at $693.69. They're down 2% today. We have Bitcoin at $61,427.73, down 0.33% today. Gold's at $4,064.10. It's down 1.67% today. Silver is at $62.46. It is down 3.52% today. And the VIX is up 11.83% today to 22.22. Crude oil is at $83.09, up 1.93% today. The Iran fluff is still going on, so that's something. It seems the markets aren't so caught up by it anymore, but you never know. Got the big Space X IPO coming out on Friday. We're gonna read at least an article about that. And we've got the stock market heat map. So here we go with the heat map, guys. The heat map, it's a little bit of a mixed bag. We've got electronic technology. A lot of them are quite down, with Apple down 3.64% to $149.22, down. Nope, tripping. Apple's at $291.58. Ads everywhere. All right. Apple is down 3.64% to $291.58. Nvidia is at $200.42. It's down 0.22% today. Big Broadcom's at $372.10. It's down 5.12% today. One of them's up, though. GE is up. GE is up 2.61% to $330.49. We keep trucking. Technology services mostly down. Google's up, though. Google's up 0.26% to $363.96. Microsoft is down 2.02% to $403.20. Oracle's down 2.84% to $205.75. Palantir down to $132.07. It is down 3.22% today. Look at this one. AppLovin down 7.6% to $520.83. AppLovin. Palo Alto down to $263.22. It's down 2.18% today. Fascinating stuff. Retail trade, it's a mixed bag. Walmart's down, Costco's down, Home Depot's up. Health technology mostly green. We got what the heck is this? Thermo Fisher Scientific up 5.2%. Stryker Corporation, not sure what that is, but it's up 4.14%. Energy minerals are down. Not a green one I can see. Exxon down 1.87%. Chevron down 1.31%. Marathon Petroleum down 3.01%. Consumer durables. While Tesla's down, the rest of them seem... Look at this. Well, Tesla's down, the rest of them seem to be up. DHI up 4.71%. PHM. I don't even know what that is. And then Tesla's down 3%. Finance sector. Finance sector is mostly up. Morgan Stanley's down 0.94%, and Goldman Sachs is also down 1.24%. Besides that, the rest of the sector's up. No, Coinbase here is down 4.08%. Before we move on, let's look at Coinbase just for fun. Today's going to be a little bit more of an exploration of the markets, guys. I'm going to pick a stock here in a minute, and we'll cover it at the end. Just so I can, put a stock of the day type thing. But this is mostly going to be kind of just a fun, chill vibe. Coinbase, 153.97, down 0.98% today, down 0.65% in the after hours. In the last 5 days, it's down 2.82%. Last month, it's down 28.92%. Last 6 months, it's down 44.03%. Year to date, it's down 31.91%. On a 1-year chart, it's down 39.61%. On a 5-year chart, it's down 31.24%. And on a maximum chart, Coinbase goes back to April 16th, 2021. It's down 54.98%. So there you go. Coinbase. Buy a stock to buy a crypto. Getting pretty wild. All right. Speaking of that, let's move right into cryptos here. We'll look at CoinMarketCap. CoinMarketCap. Do the top. I just want to point this out real quick. I looked at these one day. These SpaceX, these are like scam things. But people are messing with it. Silly. Interesting stuff. So, number one trending on Coinbase here is Audiera. It's at $6.93 in the last hour. It's up 3.1%. In the last 24 hours, it's up 44.95%. XRP is at $1.09. In the last hour, it's up 0.15%. The last 24 hours, it's up 3.39%. Solana's number 3. It's at $63.14. Over the last hour, it is up 0.47%. Over the last 24 hours, it is down 2.56%. Tether Gold is at $4,053.81. $4,053.81. In the last hour, it's up 0.03%. In the last 24 hours, it is down 3.65%. Stellar here is number 5 at $18.27.1827. So a little over 18 cents. Last hour, it is down 0.75%. In the last 24 hours, it's down 4.93%. We've got another one, then we've got a couple of these SpaceX things. These are like weird. I think they're just scams, really. But they have got them on here. Pretty crazy. Alright. Speaking of SpaceX, let's do this. Alright. So we'll look at Tesla real quick. Just to kind of run over their numbers and stuff. Because, SpaceX is going to have something to do with Tesla. It's going to, I feel like it's going to affect it in some way. I could be wrong, but, who knows. Tesla's currently sitting at $381.59. It is down 3.8% today. In the after hours, it's down about 0.51% to $379.63 in the after hours. In the past 5 days, it's down 9.43%. The past month, it's down 14.25%. The past 6 months, it's down 15.47%. Year to date, it's down 15.15%. In the past year, it's up 17.02%. Past 5 years, it's up 87.7%. And on a maximum chart going back to September 24th, 2010, it's up 29,711.72%. So, there you go. Tesla. Tesla's PE ratio is 348.69 with an EPS of $1.09. They have a market cap of $1.20 trillion. 52-week high of $498.82, a 52-week low of $288.77, with 3.76 billion shares outstanding and about 135,000 employees. Jesus Louises. So, off of that, let's read an article about SpaceX. SpaceX IPO is said to be more than 4 times oversubscribed. Let's just read the headlines here, and then we'll probably read that one. We might read 2, who knows? Depends how fast I'm reading today. Want to buy SpaceX IPO? Prepare for sticker shock. Elizabeth Warren asked for SEC to delay the SpaceX IPO. Elizabeth Warren, you shut up. Here are all the red flags in the SpaceX IPO. Elizabeth Warren seeks delay of blockbuster IPO. Will the SpaceX IPO start the Super Bowl of levered ETFs? Will SpaceX's blockbuster IPO soar or sputter? Okay, let's pick one. Let's do this one. I'll tell you this, a lot of times stocks don't go up off of IPO. That is, something to watch here. I'd say usually they do not, actually. Maybe, eventually they do. But a lot of times, people are kind of dumping. What is this? Alright. I guess we're not reading that one. I guess it'd be maybe this one. Market Watch. It's 12 hours ago. Let's try this one. Here are all the red flags in the SpaceX IPO. 5-minute read. Opinion piece by Brett Aarons at Market Watch. So this is not the opinion of your cousin Dustin, but this is this guy's opinion. Say what you like about Elon Musk, but you have to give him credit for his vision and his chutzpah. The self-appointed techno king, last year's supposed U.S. budget czar, is the talk of the town thanks to his forthcoming space exploration technologies, aka SpaceX IPO. That initial public offering, expected to raise around $80 billion in cash, is set to take place this week and is expected to be the biggest in history, exceeding even the 2019 listing of Saudi Aramco, national oil company. I remember when Saudi Aramco IPO, that was interesting. The best place to hide needles is in a haystack. Hardly anyone is going to read the full SpaceX listing prospectus, which may be lucky for the company, as it's around 300 pages long, including innumerable repetitions. You may ask whether the length and density is a bug or a feature. The best place to hide needles is in a haystack. Okay? If your broker is offering you stock in this IPO, and you are wondering whether to participate, here are the things you should know about Wall Street isn't that anxious to tell you. Wall Street banks are going to pocket $500 million in fees from this IPO. That is, observers say, surprisingly low given the offering scale, but that shows how keen the bankers are to get their snouts in the trough of Musk's future equity sales. With that amount of money at stake, it is no surprise that Wall Street and its useful idiots in the media are pushing this stock as hard as it can be pushed. In case you missed it, jumbo Wall Street bank JP Morgan had a stock analyst covering Musk's other publicly traded company, Tesla, who was resolutely bearish. By an absolutely amazing coincidence, JP Morgan a month ago suddenly reallocated that analyst. His placement initiated coverage of Tesla with a target price more than 3 times as high, and Musk cut JP Morgan in on the IPO. JP Morgan declined to comment. Whoa, that is actually pretty interesting. Back to the article. Nothing to see here, folks. Move along. SpaceX is a financial black hole. The company is losing money with no end in sight. We have a history of net losses and may not achieve profitability in the future. The prospectus says the company lost $4.6 billion in 2023, $4.9 billion in 2025, and $4.3 billion in the first 3 months of this year, equivalent to $2 million per hour. In total, SpaceX has lost $41 billion so far. CapEx and costs will rise in the future, it warns. Wow. Right now, SpaceX as a business is simply a mobile network, Starlink, that uses satellites. The Starlink division generates 70% of all revenues and far more than 100% of all net income. Given that the rest of the company loses money, Starlink currently has 10.3 million customers and generated $3.3 billion in revenue in the first quarter. For comparison, the three main U.S. terrestrial mobile networks, Verizon, T-Mobile, and AT&T, had in total 40 times as many customers and 30 times as much revenue. Meanwhile, their aggregate market values add up to less than 1/3 of the SpaceX IPO valuation. Ooh, wow. On the upside, Starlink can be accessed while you're on a plane or on a boat on the high seas. How do you ask $1.8 trillion for a mobile operator with 10 million customers by promising trillions in future profits from other completely unproven businesses? In the case of SpaceX, the big promise relates to artificial intelligence. AI applications, including business and consumer demand, supposedly represent $26.5 trillion, or 93% of the alleged total addressable market that SpaceX is chasing. Why would Musk's Grok AI platform be better than Anthropic's Claude or OpenAI's ChatGPT or Alphabet Unit Google's Gemini? The SpaceX prospectus claims a number of advantages, including the alleged cost advantage of running solar-powered data farms in space. We shall see. Meanwhile, it also names as an actual competitive advantage Grok's deep integration with X, the former Twitter purchased by Musk in 2022. This direct real-time access to the information and human discourse on X enhances Grok's truth-seeking capabilities by grounding outputs in up-to-date knowledge and diverse viewpoints. The prospectus says, yep, Twitter is giving us a source for truth. This guy's a hater. But, I don't like what I'm hearing either, though. Back to the article. Whether the lawyers were laughing when they typed this is known only to them, but I'll take the over. Meanwhile, as of March 31st, Grok and Twitter had allegedly $1.3 billion global users. Less than half were active. The total number of paying subscribers are 6.3 million, including 4.4 million who are paying for X, and 1.9 million who are paying for Grok. Booyah. The rest of the company's dreams are more moonshine than moon landings. Future business plans, the company says, include the establishment of a lunar economy and interplanetary industrialization, space tourism, and cargo transport to the moon. In orbit manufacturing, passenger transport to the moon, passenger and cargo transport to Mars, energy production on the moon and Mars, manufacturing capabilities on the moon and Mars, and asteroid mining. I don't know. Many of these initiatives or dreams, the company admits, involve significant technical complexity, unproven technologies, or technologies that do not exist or may require significant advancements, and such initiatives may not achieve commercial viability. In other words, the company plans to target markets that may not even exist using technologies it does not have. This is at least an advance over the infamous IPO during the South Sea bubble of 1720, when, according to historian Charles Mackay, a clever stock operator managed to raise money for a company for carrying on an undertaking of great advantage, but nobody to know what it is. Shrewdly, Mackay wrote, the stock operator in that case pocketed the cash and fled the country the next day. Okay, that's pretty funny. Rounding out the goodies in the SpaceX prospectus is the news that Musk will retain 82.4% of the votes through his control of the Class B voting stock and will single-handedly pick a majority of the board. Oh, and while Wall Street is claiming the stock is worth $135 a share, as recently as last October, it was being valued internally at $42. Are you being ripped off, or has the company's value tripled in the past 8 months? You make the call. Okay. Let's do this real quick. What will SpaceX stock price be at IPO? Answer in one paragraph. SpaceX has broken with traditional market conventions by setting a fixed initial public offering price of $135 a share by bypassing the typical preliminary price range used for price discovery, scheduled to begin trading on the NASDAQ under the ticker SPCX on Friday, June 12, 2026. This massive debut aims to issue 555.6 million shares to raise an unprecedented $75 billion. This record-shattering capital raise values the space technology and artificial intelligence giant at approximately $1.75 trillion to $1.77 trillion, making it the largest public debut by market cap in history. You can check out this Space X IPO price analysis to see financial journalists break down the specifics of the $135 share price, the historic $75 billion capital raise, and how it impacts the broader tech market. So what we'll do is we'll have a look at a couple of other stocks that might kind of benefit from this IPO. Whether SpaceX ends up going to the moon or not remains to be seen, but there are some other stocks that might end up benefiting from this space stuff. So let's check it out. So right here we've got Rocket Lab. I did a video on Rocket Lab, so we're not going to dive too deep into it, but if you want to check it out, it's on my channel. Rocket Lab's currently sitting at 105.05. Over the course of the day, it was down 2.94%. Oh no, it's currently sitting at 103.11. So, it was down 3.94% over the course of the day, and in the after hours, down another 1.85%. Over the past 5 days, it's down 8.07%. Over the past month, it's down 10.48%. Over the past 6 months, it's up 82.63%. Year to date, it's up 50.59%. Over the last year, it's up 286.64%. Over the past 5 years, it's up 903.34%. And on an all-time chart going back to November 27th of 2020, it is up 969.76%. That's Rocket Lab. They got an EPS of negative 33 cents. They could become profitable at some point. You know what I mean? Kind of interesting. Market cap of $60.81 billion. Yeah. Interesting stuff. We'll look at one more, and I think we'll dive into this one a little deeper. Lunar. Intuitive Machines. Ticker symbol LUNR. Okay. Well, they've got even more of a negative EPS here. But let's check them out. So, Over the course of the day, they were down 3.4%, and then the after hours down another 0.62% to $26.37. Over the past 5 days, they're down 18.4%. Over the past month, they're down 18.15%. Over the past 6 months, they're up 124.3%. Year to date, they're up 63.49%. On a 1-year chart, they're up 136.71%. On a 5-year chart, they're up 174.69%. On a maximum chart, this goes back to November 19th of 2021, they're up 174.69%. All right. They got a 52-week high of $46.75, a 52-week low of $7.78. That's a range. They got an EPS of negative 0.86 or negative 86 cents. Negative 86 cents. They got 160.45 million shares outstanding, 525 employees, and a market capitalization of $5.76 billion. We'll have a look at earnings here. They don't got the last one posted. I don't know what that's about, but let's go on down. So, Q1 2026, they beat on EPS by 14%. They missed on revenue by 9.05%. They also missed on revenue in Q4 of 2025 by 24.09%. They're predicted to get $59.00 million. They got $44.79 million. But they beat on EPS there. They're predicted to get negative 5 cents. And they got negative 3 cents. Beating by 33.98%. I mean, they missed quite a bit. Q3 2025, they missed on EPS. Q2 of 2025, they missed on EPS by 162.75%. Q1, they missed by 295.6%. Jesus. You don't like to see it, but this is emerging technology. You never know what could happen, I guess. Let's look at their overview. Perspectives from across the web. Intuitive Machines declined significantly over the past month amid high volatility. Recent downward movement was driven by a major earnings miss and missing out on NASA rover contracts. However, analysts project a recovery for the next year supported by a record $1.1 billion backlog and expectations of reaching positive EBITDA in 2026. The bullish view. Explosive revenue growth and high visibility. Revenue grew approximately 300% in Q1 2026 to $186.7 million. Bolstered by the Lanteris acquisition, management reaffirmed full year 2026 revenue guidance between $900 million and $1 billion. A record $1.1 billion backlog provides significant long-term visibility as the company transitions into a space infrastructure powerhouse. Strong institutional and analyst support. The consensus rating remains a strong buy with a price target average near $42, implying over 50% upside. Recent months saw major target hikes, including a $75 bull case. Institutional ownership is high at approximately 72%, with major firms like BlackRock and State Street holding significant positions. Expanding mission pipeline and strategic M&A, the company secured a $180.4 million NASA contract for its 5th CLPS mission and became a prime contractor for lunar orbital imaging payloads. Recent acquisitions like Goon-Hilly Earth Station and Lanteris Space Systems vertically integrate to the business, enabling high-margin recurring revenue from CIS lunar data relay and infrastructure services. The bearish view. Significant earnings miss and cash burn. Q1 2026 reported an EPS of negative 25 cents, missing the consensus estimate of negative 0.06 cents by over 300%. The company continues to experience high cash burn with negative free cash flow of approximately $64.6 million in the most recent quarter due to high fixed costs and acquisition-related expenses. execution risks, and lost contracts. Intuitive Machines faced a setback after failing to secure a NASA Lunar Terrain Rover contract, which went to competitors. High volatility remains a concern as future success depends on complex, high-stakes missions like the upcoming IM-3, where any failure could severely damage NASA's long-term confidence. We're right at the freaking website of Intuitive Machines, guys. I love it. Okay, so there's the co-founder, president, chief executive officer, senior vice president, chief technology officer, senior vice president, chief financial officer, Pete McGrath. Interesting. Vice president of engineering. Check this out. Intuitive Machines is an American company headquartered in Houston, Texas. It was founded in 2013 by Stefan Altimus, Dr. Cam Gafarian, and Dr. Tim Crane. Intuitive Machines provides lunar delivery, data transmission, and infrastructure services to open access to the moon for the progress of humanity. How cool is that? As humans, we must inspire and be inspired. Whether in pursuit of a medical breakthrough or exploring our solar system, we are endlessly drawn to the progress of humanity. Intuitive Machines started as an idea written on a napkin to solve humanity's greatest challenges. Now we are extending our lead in the commercialization of lunar space, and we are inspired by where the next decade and beyond will take us. I click on investors just to see. About IM. Intuitive Machines is a leading space infrastructure company that builds spacecraft, connects networks, and operates infrastructure as service for commercial, civil, and national security customers. With a proven track record across the space domain, the company, through organic growth and portfolio expansion, has built over 300 spacecraft, delivering over 260 kilograms of payload to the lunar surface, and provided precision navigation expertise that has guided spacecraft across our solar system. These capabilities form an integrated built, connect, operate infrastructure service company, enabling customers to achieve mission and campaign outcomes. Through a single prime solution, Intuitive Machines technology has been demonstrated across the space domain and is engineered to support the next century of opportunity in space. And it says here they have over 3,000 collective years in orbit and 300 plus spacecraft launches. I don't know, that's pretty cool, pretty interesting. So let's roll on down, see what we got. So, on an analyst rating, we've got, based on 9 analysts giving stock ratings to LUNR in the past 3 months, we've got 8 buys, 1 hold, and 0 sells. Check this out. On the 12-month forecast, based on 9 Wall Street analysts offering 12-month price targets of LUNR in the last 3 months, the highest price target is $75. That's a 182.65% increase from here. The average price target is $42.63. That's 60.66% increase from here. And then the lowest price target they have is $27. That's a 1.75% increase from here. So, if all else fails, hopefully you get a 1.75% increase. You know what I mean? I don't know. Ooh, this is from 5 hours ago. Hopefully it lets us read it. Let's read some of the other ones, like the headlines here. So, Rocket Lab versus Lunar. Which space stock has more upside as the space race heats up? 2 space stocks you've never heard of before just won $439 million to build NASA lunar rovers. Assessing Intuitive Machines' valuation as investor narratives clash over future growth. Intuitive Machines director William J. LeCoury sells $547,248 in stock. My goodness. Intuitive Machines stock hits day low of $25.69 amid price pressures. Is Intuitive Machines building a more diversified revenue model? Yeah, they probably need to find other ways to make money than just working with NASA. That's what it seems like. I don't really know, obviously. You know what I mean? This is pretty wacky shit here. But, it's fun. I like this. Sucks I gotta go to work here in a little bit. I would sit here and read about this crap all night. Such is life. Like and subscribe. Maybe next time I won't have to, you know what I mean? So here we go. This is Yahoo Finance. We've got Tomvi Sarawagi. This is on June 10th, 2026 at 2:11 p.m. 2-minute read. Is Intuitive Machines building a more diversified revenue model? Intuitive Machines, LUNR, has traditionally been viewed as a lunar exploration company. While lunar missions remain an important part of its long-term strategy, the company is increasingly evolving into a diversified space technology platform, serving commercial, civil, and national security customers. During the first quarter, 35% of revenues came from commercial customers, 38% from civil space programs, and 27% from national security initiatives. The commercial segment continues to benefit from growing demand for satellite manufacturing and space-based services. Through the recently acquired Lanteris Space Systems business, Intuitive Machines now participates in the production of commercial communication satellites and other spacecraft platforms. Projects such as XM-11 and EcoStar XXV demonstrate the company's expanding presence in commercial satellite markets. At the same time, the civil space business continues to be supported by NASA programs, including commercial lunar payload services, missions, and future moon base initiatives. The company continues to advance multiple lunar missions while pursuing larger opportunities tied to long-term lunar infrastructure development. National security has also become an increasingly important growth driver. Intuitive Machines is participating in multiple Space Development Agency programs and was selected by the U.S. Space Force for the anticipated Andromeda Indefinite Quantity Contract opportunity. The heck? Very indefinite. By serving multiple end markets and customers, Intuitive Machines may reduce its dependence on individual contract awards, mission schedules, or government funding cycles. The combination of commercial satellite production, lunar services, communications infrastructure, and national security programs creates several potential growth avenues that can support the business through different market environments. Companies leveraging government and commercial space demand. Several aerospace and defense companies are also expanding across multiple Oh, this is just some other companies here. Okay, that's kind of cool though. So, let's read them. Several aerospace and defense companies are also expanding across multiple end markets to create more balanced revenue streams. We got Kratos Defense and Security Solutions. KTOS continues to diversify across defense systems, unmanned platforms, satellite communications, and space-related technologies, reducing reliance on any single government program. Rocket Lab Corporation has evolved beyond launch services into spacecraft manufacturing, satellite components, and space systems, creating multiple revenue sources across commercial and government customers. And then Intuitive Machines, the one we're looking at. Story continues. Okay, here we go. We got a little graphic here. In terms of valuation, LUNR's forward 12-month price to sales is 6.54x, a premium to the industry's 2.5x average. Okay. Lunar's stock price performance in the past 3 months, the company's shares have risen 51.9% against the industry's 13.5% decline. We like that. We like that. Look at that. Okay. The company currently has a Zacks rank of number 4, sell. You can see the complete list of today's Zacks number 1 ranked strong buy stocks here. Okay. Alright, I guess that's the end of it. See if there's any comments. Okay. So, what do we think about that, guys? What do we think about Lunar there? What do we think about the Space X IPO? What do we think about the broader markets in general, guys? It's your cousin Dustin. Like and subscribe. I think that's going to be enough for me today. Thanks a lot.